Hello, my dear friends. So, a live show, because it's always fun to get some questions from you guys. But let's start off with my accomplishments of the past week. I was able to buy my complete position in Tesla. I think my last purchases were very bad. I did end up buying first around $190 and at a low of $180 also, but the other half of my position I bought at 208 and $210. So my average price is around $200. But maybe I had a little bit of FOMO infecting me, but at the end, as it went up so strong in only 3 days, it went from $177 to $210. So I bought the bottom and the top, but that was a very strong rebound, and that just shows there's a lot of potential here, because yes, Tesla was the worst performer of the whole Nasdaq exchange the past half year, but it was also the strongest performer the past 3 days. So and I wanted to make sure to have my position because yeah, I'm very bullish on it, and I've had this in the past that I don't take a position because the price is going up and I don't buy everything I was planning to buy, but that's a mistake. I think it is a mistake when you're in a multi. When you had a long bear market behind you, you should not be like investing because after it went down 50% or 80% or 90%, you should not like and you decide to invest X amount of your portfolio, but then because it goes up 10%, you decide not to invest so much. Yeah, that's not the right decision because, well, for Tesla in this case, I'm investing to have a 10x gain. That's the potential here. So it really does not matter whether I buy at 200 or 220, but it would be a big mistake not to buy half of my position because it just went up with 10%, because that's a lot of potential gains that I would be missing. But yeah, it's the first time I invest big in the stock market, other than index funds in the past. But yeah, I'm very happy with that, and I'm so happy I'm finally using these kind of amazing tools that brokerages offer, where you can buy with a margin loan stock. That's an incredible instrument because yeah, you borrow money at 3-4%, but if you're a good investor, your average returns will be, well, you get 7% with an index fund on average. So but you can get like, yeah, in my case I was able to have 30% returns the past 10 years, so that's a lot higher than 4%. So I make profit on borrowing money from others and investing it myself, but I've never done that in the past because, well, it is dangerous to invest more money than you own. And actually, I am actually even today not investing with leverage because it is actually too risky. Even buying Tesla stock today, let's say you buy with true leverage and you can't back it up with other assets. Well, if Tesla stock goes down by half, then suddenly you lose all your stock, and you're out of the position. And so if it goes cut by half first and then it does a 10x, while you're out of the game and you make zero money and you lost your total investment simply because you used leverage of two. So I don't like that. I don't do that. I don't take such chances because there is always a small chance it gets cut by two again after you think it has hit the bottom. So I don't do that. But what I do today is I do use leverage. I do borrow money, but at the same time I have that money somewhere else where it's doing other work. Huh? In this case, I have money waiting to buy crypto on the cheap, and that's also it's working. It's waiting because when crypto crashes, you don't have time to sell assets and to transfer assets. It will take you a week, and by that time, if you have a bottom, a true bottom usually is V-shaped, and within a couple of days it hits the bottom and it's back up Like for example, the previous bottom of Bitcoin went to from $300 to 155 in a week or so, and then it went from 155 to 220 in 2-3 days. So I mean, you don't have time to sell assets and transfer assets to catch the bottom. So you do have to set buy orders and take some counterparty risk with crypto exchanges, of course, but it is worth it because you can buy the bottom if you guess it right. Of course, that's very hard, but most importantly, you will buy. It's the preparation that's so important, because what usually happens is you get scared of buying because crypto crashes so hard, and so you end up buying not or a lot less than you were planning to. So especially if it's already invested in other things, um, it makes it all much more difficult. So I'm happy that I can keep half my cash ready to buy crypto, whilst also have it invested thanks to getting a margin loan into Tesla. Because of course I always invest like that. Like, what if? Huh? What if I'm wrong? What if the bottom is behind us in crypto? And yes, we make maybe a correction, but it's not gonna go so deep, and I will not even succeed in buying back the crypto coins that I sold. So I basically fail, and I'm wrong about crypto. Well, then I have 50% of cash on the sideline that will not be invested in crypto. I will probably only realize that in half a year or so that I was wrong, and by that time, crypto is probably a lot higher, and Tesla opportunity is probably gone. That doesn't stay there for half a year. So then I'm sitting there with half my cash not invested, having to look for a new opportunity. Can take years before you find a true opportunity that you really love and that you're willing to invest strong in and to risk your money in. So I'm thinking, yeah, like what if I'm wrong? Well, then I will be covered because I just invested in Tesla. Uh, the cash, the 25% cash, I will end up not investing in crypto. I can just use it to pay off my margin loan and have no debts. But I don't have to feel bad that it's sitting there not making money, because actually I do have the equivalent invested with a margin loan. So it's much better than not having it invested at all. So, but in case I'm right, and crypto does correct a lot, and I am able to buy it in, well, I will be able to. I only have to sell. Well, in the first place, I have 25% of my portfolio in cash still to buy that crypto correction, but after that, I will continue to buy and just sell Tesla to buy more crypto. And then, of course, there are two scenarios possible. Either Tesla in the meantime continues to go down, then I will basically have less cash to invest in crypto, and that's fine, because if I'm investing in crypto, it means it corrects a lot more than Tesla, so I will be able to build my crypto stash. But other possibility is that actually Tesla goes up in the meantime while crypto goes down. Actually, I think that's the most probable here, because I do think stock market is most likely to go up from here, but not crypto. I think crypto is most likely to go down from here. So I think the most likely scenario is actually that my cash actually goes up in value thanks to being invested in Tesla, and then I'm able to buy a crypto, but probably a lot more thanks to my cash going up in value. So yeah, that's my strategy, and I always do that. And people love to say, "Hey, you were wrong there, you were wrong there." And yes, sometimes I'm wrong, but usually I'm hedged with another position. Actually, it's not hedged. Like, the definition of hedging is to neutralize your losses. I don't do that. I don't take contrary positions, but I bet in different opportunities. And so when one doesn't pan out, there's another one that can pan out. And I think that's a very good strategy if you have the time to find the different opportunities, of course, because that's difficult, the most difficult thing. Eh? So welcome all to the live chat, and let me take a look at the comments. Hi, Cryptomedius, nice to see you. So yeah, about crypto, great to see it starting to correct. Let's hope that it continues to do so. And also something about leverage, like if things work out, my Tesla investment, like it's 50% of my portfolio, but half is a margin loan. But that means that if it works out, and let's say Tesla goes times two here, it's certainly possible. Only in a couple of months, Tesla might be back at its all-time high. Um, well, what will happen with my investment? Well, the 50% will go times two in value, but suddenly, like my margin loan will be right now, my margin loan is about 50% of my Tesla investment, but then my margin loan will be only 25% of my Tesla investment. So suddenly, I can borrow more if I want. Huh? I can just borrow more to do anything with it that I want. Um, that's a great situation. Interactive brokers, for example, allows you to um, take a margin loan, but you don't have to even buy stock with it. You could get it the cash out and buy real estate with it or crypto with it. Huh? It's a very powerful instrument, and the interest you pay is only 4%. But of course, it's backed with your stock, and if your stock goes down in value, you get a margin call. So you have to be careful there, because your stock goes down too much in value. You do have to cough up. You do have to basically give it back, the money that you loaned. But yeah, it can be a very powerful instrument. Something else I discovered, if you wanna if you are interested in investing in stocks, but you think Tesla is a little bit too risky to just invest in that, there's a fund I discovered from ARK Investments. They also invest in Tesla, and they believe strongly in Tesla. They are often on interviews on CNBC about it. They think it has the potential to go to $4,000. They are smart, a smart team, but they have a fund also, ARK fund. I will post the link below, and they invest in like 10 different or 15 different disruptive companies in different sectors. And for example, their performance of the past year, even though one of their biggest investment is Tesla, and that went down like with 50%, their fund is still up with 40% or so, because they have other investments that did very well and that neutralized this loss and even made it a profitable fund. So that's genius. And so, for example, I'm thinking like, yeah, if my Tesla investment works out, I could actually just, once my margin loan is only a small percentage of my Tesla stock, I could just take out, loan some more money, increase my margin loan again from maybe it's only 20% then to maybe 30% or 40%, and use that money to invest, for example, not in Tesla, that would be a little bit risky, of course, but for example, in a fund like that, that is more diversified. Huh? So in case Tesla goes down in value, this other investment may actually go up, and in that way, I'm not at the risk of being liquidated in that position. Welcome to the live channel. Hi, Mike. Great to hear you're from Ireland. Yes, indeed. If we start the bull market, we cannot expect more than a correction of 30% for Bitcoin. Because that's typically only what happens during a bull market. You only have 30-40% corrections, as Ladyboy City says, and then it goes up. So yes, if it corrects more than 34%, that's the first indicator we're probably not in a bull market yet. But indeed, if you have really not enough crypto, the smartest move is to set your buy orders at only a 30% correction. I don't know how much it is exactly, some around 6K or so, I think. To make sure that you do have enough crypto if the bull market would have started. But I think odds are low for that the bull market has started. So also, I just published a video with the sheet that I use myself to plan my investment, how much I will invest at what price. So you can just copy the sheet and use it yourself. So when do you give up on Tesla? I mean, if Elon Musk would, for example, leave as CEO, yes, that's a very bad. I would not be probably lose interest, because Tesla is Elon Musk. Like you can't that replace such leadership. Look at Apple. Once Steve Jobs is gone, it's over and out. Look at Microsoft. Once Bill Gates is gone, it's over and out. There is no growth anymore. Yes, what's built before will continue to grow. There is like a certain momentum that's still happening, and the stock can still multiply many folds just based on what these genius leaders did in the past. But it will very quickly start to stagnate because yeah, it's just so hard to replace. And typically the people that come to replace these genius leaders are their yeah, or their second in commands, generals that are very different characters. They're very good at following orders, but they are not like the actually the leaders. So when they end up having to lead it, it doesn't really work out well. Huh? So that's one situation. That's the most important one for Tesla. Other than that, I'm happy to make the ride down and lose 90% of my investment and put up the cash to not be pushed out of my position. I think a stock like Tesla, you just have to keep in the long run, and you will be rewarded big. But you have to be willing to do the roller coaster, similar to crypto. Hi, Tony. Do you look at only top 10 coins or all top 100? The thing is, I'm open. I'm only rarely open to smaller cryptos, and that's usually. I've learned that you should only do that once the bull market is clearly started and the big coins have breached their all-time high. So Bitcoin BTC has breached 20k. Only then, like, it's interesting to look at small coins because usually until that time, until it is not sure that the bull market has started, the smaller coins do poorly, and they continue to go down versus the big coins. So there is no opportunity there yet. It's much smarter to invest in the big coins and then only start to really look at small coins when the bull market is clearly started, and when your big coins show nice profits versus small coins, then it's a wise move to start diversifying into small coins. So I have not done any research on small coins. I have no clue what's basically interesting in the crypto market today. Hey, Crypto Mages, great to hear you also invested 10% of your cash in Tesla. That's cool. That's cool. I wish you good luck with that. Yeah, so margin loans depends on brokerages, and many brokerages, of course, you ask way too much. They ask like 7, 8%. For example, Interactive Brokers asks 3%, 3.5%, 4% for margin loans, and that's for the US dollar, which has the highest interest rate. If you do euros, it's only 2% or so, and pounds. Yeah, so what? How much margin can you get? It depends on. Usually, it's about 50%. For example, Tesla was 30% margin, but then they increased it to 40% margin. That's typically what happens when the market goes down. They increase margin requirements, so that fucks over many people that use too much margin. You should not do that. So I think a safe way to calculate is that even if they offer like allow you to buy 3 times as much than the cash you have, I think buying only double as much as the cash you have and then even have it backed up with cash you actually have is a wise move here. It's very risky to actually invest more than you actually have. Smooth operator asked if I gave up on crypto. I don't know where that question comes. You follow my work all the time. Why do you ask that? Of course not. Like crypto, I was focused on Tesla because I want to invest in that. But crypto is still the highest risk reward by far, much better than Tesla, for example. The potential for Ethereum, Bitcoin Cash is to do 100x from current prices in the next bull market. That's the potential reward that is actually likely going to happen, in my opinion. So that's where you should be. Yeah, yeah, yeah. Thank you so much, Flo, for the great compliments. I really appreciate it. Yeah, diversification. Flo asks. He's surprised I don't use diversification. Yes, I've come. I also used to believe that, but it's just practically not possible. Um, okay, diversification is. I've long believed in that, but you have different kind of diversification. You have the diversification using hedging. That means that you invest in things that are opposite to each other. For example, you invest in stocks, but you also invest in gold. And usually, when stocks have a bad decade, gold will have a good decade, and so that's a hedge. But that means when stock do good, then your gold does bad. And so one, even though one saves the other, it also drags down your performance. And so I don't think that's a good strategy because, well, if you do your analysis properly, actually you can see that odds are highest, for example, today, much higher that stocks will go up than that gold will go up, simply because of the long-term cycles that I've repeated so many times, and I repeat it so many times because it's so important, and I can't believe that so many people overlook these basic facts that you can just see very clearly in the history of the past 100 years. That, yeah, gold cycle is only every 20-30 years that you have 10 years of gold going up and commodities going up. It's actually the commodity cycle. But after that, it's like stocks that go up again for 20-30 years. That's just a cycle. It's a basic cycle. Um, it's a supply and demand cycle. Usually, what happens is that when commodities go up in price, you get a lot of more mining and production, and that's usually because there's a shortage. And then, but it takes a long time before everything is online. It takes like 5 to 10 years. So you have a shortage the whole way up. Prices become more and more expensive. You get, in the beginning it's due to a shortage, but after a while it's due to just investment demand, speculators, investors buying more of it and pushing up prices, and you end up with a bubble in commodities, a boom, and and you get a massive new mining and production capacity online, and that suddenly reaches the point where you get oversupply, and the crash starts, and that crash takes 20 to 30 years before that oversupply is goes into a shortage again. Uh, that's how long it takes, and that whole time commodities become cheaper and cheaper, and that's very good for the economy. That oil and iron and grain and also silver is also used, and copper and even gold, that it goes down in price is very good because it pushes up the well-being of everybody. You can buy more. Companies can produce products cheaper. It becomes cheaper for the consumer, and so it pushes up the economy. But after a while, they start to use too much, and so that creates a shortage. So this is a basic cycle, and that is a great guide to decide whether stocks have a a good risk reward or a bad risk reward, and the same for gold and commodities. So today, for example, no, I don't think it's wise to hedge with gold because the chances for gold to go up is very low. Maybe you can do like 5% gold because that's actually the and 95% stocks because that's actually the probability and the risk reward ratio. Stocks is 9 or 10 times better risk reward ratio today than gold. So it should also be 10 times more exposed in your portfolio. That's how I invest. But of course, overall, stocks indexes are not great investments, or gold overall, because you have very, very big assets. You can make a lot more if you go into specifics, like when it comes to gold, like certain kind of gold producers. If you wanna, if it's a decade for gold, actually you can make a lot more if you study the market. Certain gold producers will be actually much better investments than gold itself, based on where the cycle is. And the same for stocks. A certain kind of growth stocks will be much better investment than stock indexes. So what do you want to do? The best thing to do is, as an active investor, is to analyze these opportunities and look at the risk reward ratio of these individual stocks, and then you want to invest the most in the best companies, and that's what I do. So that's that's not diversification. It leads to concentration because, well, of course, the big problem with this strategy is it requires so much work to find opportunities, and so yeah, I do think it's a good strategy to concentrate in opportunities that you think are very very good. And yes, it does mean that yeah, you can be wrong and you can lose a lot, but as with cryptos, like if the crypto is in a bull market, even if you bet on the wrong horses, it still goes up. It's the same in the stock market. If stock market is in a huge bull market, or you have the internet bubble, you bet on the wrong companies, it still goes up. Huh? So even though you may just select a few shares, actually, if the cycle with you, the odds for losing is quite low. Huh? And of course you always use your critical brain power, and when the story is too good to be true, well, it probably is, huh? So yeah, and track record is so important. You have to look at past performance before you risk your fortune with a person, and that's so important too. Like all these Bitcoin BTC leaders, what did they do in the past? The ones that now leading Bitcoin Core, what kind of record do these guys have? What did they accomplish in the past? Not much, huh? Adam Beck totally missed actually the Bitcoin opportunity. Is that he thought it was wrong. He thought Satoshi did a poor design. He only joined Bitcoin when it actually was already a success after 2013, when it went already up from 0.1 cent to from 1 cent to $1,000. After that, he said, "Oh, okay, that seems like a good idea. Let's join Bitcoin Core developers team." So he has no vision. He doesn't see it, and that's his track record. So, and that's the person that's today leading Bitcoin Core and makes decisions about how it should be developed. Um, yeah, I mean, track record is super important. When you risk your money in a certain investment, you better have a leader that has proven in the past to make lots of money, that has proven to create value. And if not, yeah, that's risky. But not diversifying, I don't think that's risky. But investing your money with people that have no track record of creating value in the past, that's risky. Thanks for the question, Flo. Cryptomedius ask my price estimate for Tesla in 6 months' time. I think it will be back at the all-time high of $300-400. Huh? Yeah. Let me see at the other questions. Michael Galvin asks, do you have a good reserve in case your investments go wrong? A great question. Like, can you provide for your family? That's a very good question. And I think as an investor, the right attitude there is to adapt your lifestyle to your investment returns. It's just the reality of it. Everybody does that actually automatically. Like when you make a good living with a certain kind of job, you are going to spend more. But if that job drops off, or you have a less good job, you have to spend less. It's the same when your company is doing well or poorly, or when your investment is doing well or poorly. You adapt your lifestyle to your returns, and it's very important to do that. Many people can't cut back quick enough, and that's why they start to spend more than they can afford and get into financial trouble. That's wrong. So I've lived for decades as an absolute cheapskate, and I invest spending almost nothing. Today I go on restaurants, but for me that's a luxury. I would never do that in the past because I couldn't afford it. So it's very important to be able to live cheaply. I have a whole community on YouTube how to do that, and that's what my plan is in case my investments go wrong. Yes, I will cut back strongly on my living expenses, and I hope that my girls will be willing to do that. But of course, that's not sure. But yeah, that's the right approach, I think. Yeah, and so you can't really like you can't put money aside for bad times. Um, I do that a little bit, but not much, because I really, yeah, I just trust in my investment talent, and of course I know I can lose a lot, that's for sure, but I also trust that I will continue to invest and take my chances, and then and invest not and invest in things that have positive risk reward ratios. That's the difference between gambling and investing, is not how much risk you take, but whether you are putting your money and betting your money on things that have a positive expected return. As long as you do that and you keep on doing that even after you made huge losses, you'll do well, because well, the odds are in favor of you, and you can only have so much bad luck. It's just based off, you throw the dice, you will get average returns. Let me see at the other questions. Thanks, Michael, for the question. Do you think one of the crypto projects could really break through and become bigger than BTC? How would you recognize that? Yes, absolutely. I think you can already see that. Just look at past market share, the dominance of a project. Is it going up over time or down over time? If it's going up over time, well, it's busy in gaining market share, and that means that sooner or later it will become bigger than Bitcoin, because Bitcoin is going down in market share since its inception, but especially since 2017, when it started to be really mismanaged, and transaction fees went up. So just draw a trend line there, and you will see that's the case. But for example, for Ethereum, it's not losing market share; it's going up. So and of course you can compare versus the whole crypto industry, but you should compare versus Bitcoin, but also versus the whole crypto industry. That's also important. If a project succeeds in keeping its market share, then that's very, very impressive. And Ethereum is one of them, for example. So it's very likely that if the trend continues, it will become bigger than Bitcoin, and it's probably going to happen in the next bull market. And I'm a personal fan of Bitcoin Cash, but I have to admit there that of course market share has not been spectacular. It's only at 2 or 3% market share here, and it's been a lot higher. But of course, I mean at the peak, like Bitcoin Cash was about, was it 10% market share? Ethereum was about 20% market share. Um, Both have been cut in half, but Bitcoin Cash is actually cut by four. But Ethereum is cut in half today. So they lost market share. And at this point in time, Bitcoin BTC is actually doing pretty well when it comes to market share. But you have to look at these things over boom and bust, over bull and bear cycle, because of course you always have these trends that during a bull market, smaller coins gain market share and Bitcoin loses market share. During a bear market, it's the inverse. Bitcoin gains back some market share, and the other coins lose some market share again. But overall, there is a clear trend here, and yeah, I think therefore Ethereum and Bitcoin Cashes are great investments, much better than Bitcoin BTC, because they are overall gaining or keeping their market share. Let me see at the other questions. Michael has a question at 21.1. 21, no, at 21.10. I don't know. I think here. Yeah, I answered that. Um, what is it? Nick D. About Warren Buffett. Yes, value investing. I also use value investing. But you say their number one rule is protecting capital, and I don't do that. But is that so? Like, that's what they say, but they also plow down their money. But before they analyze strongly and they want to see like very very strong evidence that this company is growing in cash flow and in profits. For example, Warren Buffett today feels comfortable investing in Amazon, but only today he feels comfortable doing that. But Amazon already did 1000x. So Warren Buffett's investment style is very because he manages so much capital, he can only invest in very large market cap enterprises, and so it's a very he's in a very different situation as us. Um, mm, we'll take a look at the other questions. Um, 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 the bot guy says that the dominance argument is flawed because there are way more coins, so of course Bitcoin will lose market dominance. Yeah, but that's also true in the beginning. The first 5 years, there were also a strong growth in coins, especially during bull markets. But what you saw is that Bitcoin lost market share, but not at a rapid pace. It's only in 2017 that it actually collapsed in market share. You can see that so clearly on the chart. It's out of question. So there is a clear correlation between how much Bitcoin has lost market share and the fees they ask on their network. The moment it started to ask high fees, the moment fees start to go up, it collapsed in market share. So there's a clear correlation there. And it's still the case today. Huh? It's still costing a lot of money to transfer money on Bitcoin. Well, how much money do you need to be financially free? Actually, that it's not based on the amount of money. It's really is whether you want to be financially free or not. You can live in poverty and be financially free. That's what I did for a long time. Um, I mean, yeah, I live very, very, very simple and spend very, very little and work a lot. And and that means it's a hard way because most people prefer to actually have money, so they prefer to choose some kind of job that will give them a nice income, and they can live the good life, start live the good life. Usually, it's like always about short-term gains versus long-term gains. Do you want to suffer in the short term to have more in the long term? That's usually what you need to do if you want to be financially free. So you don't really need that money. What you need is be willing to set your priority, and you will, of course, you need to work sometimes for other people to make money, but yeah, being financially free is more of a choice that you set first, and then based on that you decide how you're going to make money. Because actually financially free, you're never free of work. If you are have your own company or your own portfolio that you invest, uh, or you don't want to work much anymore, you always have your investments to concern about. So you can choose to put less time into that, yes, but it will cost you also in the returns. It like it's not possible to not work and to make money. Passive investing does not really exist. Um, what you can choose is to invest very little and choose investment strategies that require very little time, but then also you will make very low returns. And the last thing people never want to hear, you have this whole index movement on the internet, that or real estate bugs or gold bugs that that claim that, hey man, you just put it in this index fund and you have 7% per year. Look, that's fantastic. You become rich sleeping. But it's very simple, proven wrong. Real inflation is 5% per year. Just look at price increases, and you cannot see that. But these people are unable to see that. You may prove it with hard numbers, how much a bottle of Coca-Cola went up, or how much a house went up, or how much a car went up in price, or how much fuel went up, or how much an electricity bill went up. And you just look over like decades, and you can see clearly it's 5% per year that these prices go up. So that's the inflation rate. So you can deduct that from the 7%. How much returns we have now with your genius passive investment strategy? It's 2%, and then you still have to deduct taxes. Some countries have capital gains taxes. You still have to deduct transaction costs. There's not much left from a passive investment strategy. You actually don't make money, just keep the purchasing power of your capital. Meaning, if you want to live the good life, you're gonna have to have like, you're eating your capital, and you will end up with zero after 10, 20, 30 years living like that. It doesn't matter from how much you start, because you always adapt your spending on based how much capital you have. So you're forced to, if you want to make real money, you have to actually actively invest and take your chance and do risk reward calculations, and risk your money on something. Only then you're gonna be able to make money. So financially free is a little bit yeah, an illusion. The only thing you can look at is what's your net worth, like that can give you an idea, like, and if you put it in a passive investment strategy, how long can you live from that based on how much you spent? Yes, you can do such calculations. Yes, you could say then that you're financially free in a way, but you're still going to be eating your capital. mm, uh, let's see what other questions we have. Mm, well, I did a different kind of jobs when I was younger, but as a salesman, I worked. But actually, my capital comes from inheritance. I inherited money, and in the beginning, it was invested by the bank, and I lost a lot. And I was forced to really learn to invest, and then I still lost. But after a while, yeah, I learned to invest, and that's how I started as an investor, by inheriting capital. I was forced to learn to invest at young age, because otherwise it would be gone quickly. Um, yeah, Jeff asks about BCH, if it's 51% attacked, but that was not the case. See, this is an example. In some previous video, people, oh, yeah, it's 51% attacked. What do you think of that? But see, that question on SEG is already containing a falsehood, and that's so often the case in crypto. And I see it actually when I study Tesla also, like in these kind of communities, you have people that are against Tesla, for example, and they are actually short selling it, and they actually spread false information, FUD. And it's the same in crypto. It happens so often. Like it was not 51% attack, but that's the what the competition says. The Bitcoin Core group says, but it's not true. It's not true. What happened there is that there was actually an attack on Bitcoin Cash, and someone tried to do false transactions, and the miners, or 51% of the miners, band together to revert this transaction, or to not allow it to go through, and that's actually what miners do all the time. They use their majority to make sure that correct transactions are validated and incorrect transactions or fraudulent transactions are not validated. That's the job of the miners. Huh? That's what the miners did here. So that's not an attack. It's only an attack when they do something that's not supposed to happen. Let's say these miners, 51% of the miners validate a transaction that is fraudulent. Then it's an attack. Huh? But if they actually revert or block a transaction that is actually trying to steal money, then actually that's not an attack. That's just the normal security system working. Yeah. Cryptomedius, yeah, that's great that you would start to make the logarithmic regression chart, because indeed Owen Wonder has disappeared from Twitter. Suggestions where to start, I don't really have. This is, I'm not good in mathematics and I don't know how he does that. Yeah, I really don't. I only have a link how to calculate it for today. That you can find it on the sheet also. Um, but yeah, that's it. There is someone else that also makes the chart. I will link it on Twitter. Someone who's also making a good logarithmic regression chart. I will link this guy to you. Yeah. Why do you like BCH over BTC? Check my videos. Why I love Bitcoin Cash. I made several on them, and I started investing at the moment it was released in the 1st of August 2017. I still stand behind all those arguments. Let's see. Yeah, the Lightning Network, I think, is oversold and underdelivered up until today. So, no, I would not count on that to save Bitcoin. No, no, no. Try to use it and see for yourself. Well, I went through all the questions. I will not keep it too long because I want people to rewatch this. It was nice to see all of you. Thanks so much. Maybe a final question here from Matt, which, yeah, gambling. I just said it before also, but you have to always look at the arguments that what people say. Like his father is saying to him that he's gambling, but it's always like that when people criticize you. It doesn't matter whether it's your father or your siblings or your friends. Or just strangers on the internet. Look at what they say exactly, and if it's true or not. Huh? Because if it's not true, well then it's not true. But it could also be true. So analyze it, and in this case, it depends. The problem is many people, when you invest in something that they find risky, they will call it gambling. But that's not the right definition, because actually look what gambling is. Gambling in casinos, what is that? It's betting your money, for example, on red, and if it's red, you win double. If it's black, you lose it all. But actually, it's not like that, because there is more than black and red. If you turn the wheel, you don't have 50% chance to have red. And actually, if you double your money, if you have 50% chance to double your money and 50% chance to lose it, what is your expected return? Is zero. Huh? So are you a gambler there? No, actually, because you don't have a negative return. Are you an investor? No, because you don't have a positive expected return. You're just basically investing, like your expected return is zero, so you're just basically wasting your time. But the Wheel of Fortune has more than black and red. There's probably some other points where you actually also don't make money. So actually your chance is not to have 50% of doubling. It's less than 50% to double and probably more than 50% to lose it all. And that's a negative expected return, and that's the definition of gambling. All these games that you can play in casino, yes, you can win, but the chance is lower than losing. So the chance is higher that you will lose. And so you have an expected negative return, and so that's gambling. That's the definition of gambling. Many people actually do that also in real life. Like they don't go to the casino, but they buy a lot of tickets in the store where you have a very small chance to win a lot, but you have a very high chance to lose a little. And and that's also a negative expected return, and that's gambling. Huh? But many people also do it in investing. They will invest in something that they consider not risky. For example, a real estate that has gone up for 20 or 30 years in a row with more than 7%, for example, 10% per year, and they find that it's not risky because it has gone up so much the past 10, 20, 30 years, and that's what they invest in, and then they think that's a safe investment. But actually, if you look at the market cycles, you see that actually they're also becoming very high, that the real estate will have a negative return and it will not go up at all for the next 10 years likely. And if you count for real inflation, you will lose money 5% per year. And then you don't even count all the other expenses that you have buying real estate and running it. What you see is that what they consider a safe investment is actually will have an it has today an expected negative return, and so they're actually just gambling because the chance that they will make money with this investment is low. Typically, these people will also blame other people of gambling, other people that actually make, for example, investment in a stock, a high growing stock, or in crypto, a high growing new asset. They will accuse these people of being gamblers because they think these are risky assets. But actually, if you look at the risk reward of these assets, they are positive. They have a positive expected return, and it's actually a real investment. It's not a gamble. It's an actual real investment because, yes, of course, there's a low chance you lose money. That's everywhere the case. But since the risk reward ratio is very positive, your expected return is also very positive. And so, if you on average do such investments, you will make money with investing. So, I would just tell that to your father and see how he responds. If he responds dismissive, then, well, not only does he give you false accusations, he's also not able to see that and not willing to apologize for it and not interested to learn. And so maybe he's just interested in putting you down, or and that's not a good relationship. So I would really challenge him on that. Uh, but maybe he just like doesn't understand it and he's open to learn. So that would be my advice. Let's see. Yeah. Yeah. All right. I think that was it. Thanks so much, all, for joining the live chat. It was a pleasure having you, and I wish you all a great weekend. Have a great day. Bye bye.